Hello friends, a very warm welcome to my channel. So in this video, we are going to discuss a company in the technology infrastructure as well as data center space. So as you know, India or globally also, due to the advent of AI, there is a lot of requirement of computing as well as data center space. And the present capacities globally aren't enough to cater to this requirement. Especially in India, in the next couple of years, we expect the present capacities to nearly double in the data center area. So when such tailwinds are there in any sector, it is very important for us to look at companies in that sector because they will have a natural push towards growth. So one such company is Blackbox Limited. Although this company derives a very minuscule portion of its revenue from India right now, but going forward, they are open to look at India as a market and grow their revenue share in India compared to the global countries. So if you're new to the channel, please do subscribe and hit the bell icon. And if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market in the Telegram. I also share some strategies which will help you get higher returns from your portfolio. So let's begin the analysis of Blackbox Limited. I'll try to keep this analysis very crisp, highlighting only the important points. This is not a deep dive video. So this will be a flow of our discussion. We'll talk about the business model of Blackbox Limited in brief. We'll look at the stock performance in the last 3-4 years. We'll understand the main financial metrics. We'll understand why the stock has given the rally. We'll look at the management's guidance going forward. We'll talk about the valuations of the stock at present. We'll look at the risks of investing in this company and then overall form a view as to what should one do with the stock. So Blackbox Limited is a global digital infrastructure integrator. So every word carries certain importance here. Firstly, it's a global company which derives majority of its revenues from outside India. Second thing is it is focused on the digital side of the business. It is not a normal IT software development company. Then it caters to the infrastructure area. So it is not a software development company. They are more into the infrastructure of the IT space. Now what does this cover? This covers connectivity and network solutions. This covers data center solutions. It also covers cybersecurity solutions. So in one of their assignments, they've got a assignment to manage the entire cybersecurity of a US based airport. So that kind of business this company does. They have a team of more than 4,000 people working with them and they have presence in more than 35 countries. Now I'll talk about the data center business in more detail because that is the trigger for reading this company, or that is something which is attracting a lot of investors to this company. So this is an extract of their recent earnings call. So the management explains that they provide two specific solutions to data center. The first one is connectivity, which includes the fiber and passive infrastructure. And the second is networking, which is specifically their 5G LTE solutions. So what you understand from this is they are focused on providing the connectivity and other infrastructure in the data center area. They are not setting up their own data centers and letting others use it and charging on a subscription basis. So the Googles, Amazons of the world are having their own data centers. They are called hyperscalers. For this company, such hyperscalers are their clients. And for data centers, they are specifically providing this service. And when you talk about the competition in this space, the company itself mentions that they have a lot of players in the US who are into this space exactly, and they are giving competition to this company. Now, geography wise, if you see, a majority of the revenue comes from North America, which is close to 77%. So there could be a concentration of regions risk in the business. Then the remaining is well distributed in India, Europe, and the other Middle East regions. Specifically, if you talk about industry, finance generates about 22%, 21% is from technology, healthcare about 11%, 10% from business services, and the others. So this is a brief idea of what the company does. Now, if you look at the stock performance, it was in consolidation for a very long time until COVID. There was absolutely not much movement in the stock price. Post-COVID, it gave a fresh rally up to a level of almost 350 rupees. Then there was a sharp correction to 100 rupees. And now there is another rally which has taken the stock to a new high of 450 rupees. So as you notice that the stock is very volatile and it is not quite holding on to the higher levels for a very long time. Now, when you look at the financial performance in the last 5 years, the revenue dipped from about 5,000 crores to 4,600 crores in FY21. And then jumped to almost 6,200 crores in FY24. So although there is a rise in revenue, I do not see a very sharp revenue growth in the last few years. On the profitability front, the EBITDA growth remains inconsistent. The EBITDA increased from about 328 crores to 364 crores in FY21, then dipped to almost 258 crores in FY22. But in the recent year which has gone by, the company says that they have focused a lot on the margins and profitability, which led to the jump in EBITDA to almost 426 crores, which is nearly 2x of about FY22. When you look at the margins have not been very impressive. So they were doing at EBITDA of about 7-8% in FY20 and 21, which dipped to almost 4% in FY23, and now it has bounced back to the old levels. So although the margins have come back to that zone, but still as an investor, these margins are not very impressive. So a part of their holding is pledged. Debt is very high in this company. They have more than 800 crores of debt on the balance sheet, which is almost 1.7x of debt equity ratio. So this is a kind of a red flag for me as an investor, because if the company is generating sufficient free cash flows over a period of time, they shouldn't have so much debt. The payable days of almost 142, which shows that they are delaying the payments to their vendors. Now, what led to the rise in the stock price? Although not very impressive, but there was growth in sales. Secondly, there was a jump in profit in the recent year in FY24. When somebody talks about data center as there are very limited players in the listed universe, then automatically that company gets attention. And in terms of re-rating, the stock has got re-rated and the valuations have increased much more compared to before. Now let's talk about the management outlook and growth in the company. The order book of the company compared to the end of December 23, which was about $490 million, has dropped to almost $470 million in the quarter ending March 31st, 2024. So this shows that there is a decrease in the order pipeline. So these are some recent key wins. So in terms of the quantum of the order size, it has been decent. More than $100 million order in data center space is one of the achievements of the company in the recent year. Now this is the guidance which was given by the management earlier and what the management is giving for the coming year. So in FY23, their estimate was to grow the revenue at about 7,000 to 7,500 crores. Now what they have achieved is just 6,282 crores, which is much lesser than what they have guided for earlier. And the management says that the customers are delaying their decisions for order execution, which is leading to lower revenue. However, they are focusing on profitability, and that's why the profitability guidance is met. EBITDA they had guided for about 400 to 450 crores, they had achieved 428, so EBITDA was achieved, and profit after tax was almost achieved as they guided for about 140 crores to 175, and they near about reached almost 140 on the lower band. Now what they are guiding for FY23, from the present 6,282 crores, they are guiding for a revenue of almost 6,600 to 6,900 crores. So this is not at all an impressive guidance, because it is in the range of just 5 to 10% growth. And it is interesting to understand that this guidance is lower than the guidance which they had given earlier for FY24, which is about 7,000 to 7,500 crores. So from this, I infer that the management is not very confident of good growth in FY25. Although on the profitability front, they are expecting the company to do much better. So the company wants to focus on larger deals to get better margins. They want to exit their low value customers. The PAT is under pressure because of the finance cost, as we have seen that the debt is very high in the company. They see good growth in the data center space, that they say that it is consistently growing at more than 20% every year in the last few years. And gradually, as they focus more on the margins, they expect the margins to grow up to 10% at the operating level. Now let's talk about the valuations of the company. In the last 5 years, on an average, the company got a earnings multiple of somewhere around 30 times. Right now, the stock is trading at somewhere around 44x. And this 44x is on the last year's FY24's profit, which jumped to more than 400 crores. And we are not very sure about the sustainability of this profit, because earlier the performance of the company was not very consistent. Price to book times, it is about 15x. So it is again on the higher side. So overall, I'm not very comfortable with the valuations at present. Now, what are the risks of investing in this business? The order book has reduced compared to December vis-a-vis March. Then they had guided for a specific revenue, and they were very far from achieving that particular growth in the year which passed by, which I don't like as an investor. In the history, their sales growth was not very consistent, and in terms of profitability, they have even gone into losses earlier. So the growth factor in terms of consistency is missing in the company. Not very comfortable to understand the business as an investor when the organization structure is so huge. The company's ownership was changed 2-3 times in the past, and very few clients contribute a larger sum of revenue to the company, which leads to the risk of client concentration. And debt is again a very big concern for me in this company. So this is the business model of Blackbox Limited, the financial parameters, the growth outlook of the company, the valuation of the stock. Now what is our overall view on the stock? So I have a slightly different view for this company, and I every time try to be very honest in giving my view. So if somebody is holding this stock, I would prefer to book a profit at this level, because the stock has rallied too much and the valuations have become expensive. And the guidance for the management in the coming year is not very impressive. Once you take away the profits, you can continue to monitor the performance, and when the growth comes back into higher than 20% kind of numbers, then you can consider re-entry at a fresh decent valuation. And for somebody who is looking at fresh entry at these levels, I wouldn't be very comfortable buying the stock at these levels at all. So that's my view on Blackbox. I hope you like the crisp and clear analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention the name of the stock in the comment section. Do join a Telegram channel using the link in the description. It's a free channel. Thank you for watching and have a wonderful day.